Hello everybody, this is Team 3. We have Sherwin, Arash, Inkalian, and Takashi in our team, and we're going to review Yelp's IPO process. Here's our agenda for today. We have company description and overview, reasons for IPO, use of proceeds, major contents of the company's registrant statement, highlights of the company's filing, company's IPO process, and company's stock movement and reasons.
Before starting our presentation, let's check out the recent commercial that briefly and effectively described the Yelp's business in a minute. Then we're gonna go over the company's overview and description, as well as the reason they filed for IPO and how they used the proceeds of this offering.
We're looking for something a little less...
terrifying?
Absolutely.
Please.
Well, check out Yelp. We know just the place.
We did a great body shop. My wife just hit a deer.
He just froze.
Yeah, they just freeze in the headlights. But it's cool. We know just the place.
They need hair and makeup. Now.
Hey, ladies.
Oh, it's so cool.
I guess you need golf lessons.
That looks rad.
Whatever you need, whenever you need it. Check Yelp first. We know just the place.
Yelp is an American multinational corporation headquartered in San Francisco, California. It was founded in 2004 by former PayPal employees Russell Simpson and Jeremy Stoppelman. It develops, hosts, and markets Yelp.com and Yelp mobile app. Yelp grew quickly and raised several rounds of funding. By 2010, it had $30 million in revenue, and websites had published more than 4.5 million crowded sourced reviews. From 2009 to 2012, Yelp expanded throughout Europe and Asia. In 2009, it entered several negotiations with Google for potential acquisition. Yelp filed with SEC on November 17, 2011, and became a public company in March 1, 2012, and became profitable for the first time 2 years later. So basically, Yelp connects people with great local businesses. Its platform features more than 22 million reviews of almost every type of local business, from restaurants, boutiques and salons to dentists, mechanics, plumbers, and more. These reviews are written by people using Yelp to share their everyday local business experiences, giving voice of consumers and bringing word of mouth online. The information these reviews provide is valuable for consumers and business alike. Yelp claims that approximately 61 million unique visitors used its website, and its mobile application was used on more than 5 million unique mobile devices on a monthly average basis during the quarter ended September 30th, 2011, right before it files for IPO. Businesses, both small and large, use Yelp's platform to engage with consumers at the critical moment when they are deciding where to spend their money. Hence, fundamentally, Yelp's business revolves around three key constituencies: the contributors who write reviews, the consumers who read them, and the local businesses that they describe. Why Yelp files for IPO with SEC? Yelp files for IPO to raise $100 million. The principal purposes of these offerings were to increase its capitalization and financial flexibility, increase its visibility in the marketplace, and create a public market for its Class A common stock. Yelp claimed that they intended to use the proceeds to them from these offerings primarily for general corporate purposes, including working capital, sales and marketing activities, general and administrative matters, and capital expenditures. But they said that they may use a portion of the net proceeds for the acquisition of or investment in technologies, solutions, or businesses that complement their business. They also said that pending these uses, they plan to invest the net proceeds for these offering in short-term interest-bearing securities such as money market, certificate of deposits, commercial paper, and guaranteed obligation of the U.S. government.
Now I'm going to talk about the contents of Form S-1. All companies that go public are required to file a Form S-1 and need to meet all criteria set by the SEC. Any securities that meet the criteria can be listed on a national exchange. However, the objectives of Form S-1 are not only to assist the company to become a public company, but also to provide reliable and fair information of companies so that investors can perform their decision-making before securities are issued. First of all, the most interesting content on Yelp's Form S-1 is its operation results. I prepared Yelp's income statement to show you its operation results, what its achievements were, and what issues they were struggling with in 2010. First, their continuous growth of sales revenue should catch your eyes. Yelp has also proudly mentioned its achievements and emphasized its long-term growth to attract more investors. Although the rapid growth in sales revenue is attractive, its net income has been a net loss from 2008 to 2010. The most significant reason causing these net losses is its high sales and marketing expenses. Yelp also recorded comments about these expenses, saying, "Our largest expense is related to sales efforts to attract local business advertising customers." Yelp indicates that these expenses were essential for its business expansion and long-term growth. Therefore, increased expense turned out to be a good sign, indicating that Yelp has been improving its sales strategy, and we can expect their continued future growth. The balance sheet is also the important element of the Form S-1 because it can help investors to see Yelp's financial situations and compare it with other competitors' financial statement. From its balance sheet, Yelp's growth in total asset is another good indicator that Yelp has been improving. Also, we should be aware of its relatively small amount of long-term liability. To show how effectively Yelp has been financing its operations without relying on financial debt, I will compare it with its major competitors in the same industry, which are Groupon and TripAdvisor. At first, the ratio of Yelp's total debt to total assets is the smallest ratio among the three. Moreover, Yelp's long-term debt to total debt is also significantly smaller than its rivals. These ratios indicate that Yelp's financial risk is minimal compared to its competitors, and also its financial management is performed very effectively. We know this because Yelp has been increasing its assets and sales without borrowing money from any financial institutions. However, Yelp also says that we may need to raise additional funds through debt financing arrangements if the financing on term is favorable to us. And if we are unable to find it, our ability to continue to support our business growth may be harmed. Therefore, we can assume that its long-term liability would probably increase, but it also indicates that Yelp is aggressively trying to expand its business. Another important element of Form S-1 should be officer compensation. It appears that although Yelp's officers received relatively lower salaries, they were also awarded stock option benefit. In fact, the CEO received $6.6 million in stock option in 2011. Next, stock ownership is also an important element of Form S1 because investors need to know who has the power to direct Yelp's business. Yelp offered two types of common stock, which are Class A common stock and Class B common stock. The difference was the number of votes allowed per share. In the table of stock ownership, it is appeared Jeremy Stoppelman, the CEO who established Yelp, does not have strong voting power, but Fred Anderson, who was Executive Vice President and CFO of Apple Inc., has stronger voting power in Yelp. Next, we will look at the MD&A. The MD&A describes Yelp's business situation from the view of management. Therefore, more detailed information is available under the MD&A section. Anyone who looks at Yelp's S1 is highly interested in what kinds of business strategies Yelp adopted to make profits. Most people believe that Yelp's revenue source is coming from its traditional advertising service. Yes, it is true, and in fact, 71% of revenues consist of local advertising. The issue is that Yelp is relying on one single revenue source too much, and there is a high risk that its revenue source may be diminished if local advertising can no longer attract customers. Being aware of this risk, Yelp has been creating new sales areas, which are brand advertising and other services. Brand advertising provides a place to display customer advertisement on Yelp's website, and other services include Yelp Deals. Yelp Deals allows customers to promote themselves and offer discounted goods and services on a real-time basis to consumers directly on its website and mobile application and via email. As I mentioned already, Yelp invested huge amounts in development of new services. As you can see, Yelp has been expanding its sales areas from local advertising to brand advertising and other services. This demonstrates that Yelp has a good likelihood of increasing its revenue. The other elements highlighted in MD&A is its market share. In the beginning, only one market existed in San Francisco and no international market had been established. But between 2005 and 2011, 65 markets, including international markets, have been added. This indicates that Yelp's service has grown in popularity over the US continent, and also Yelp's business model has been accepted in other countries. Its expenses might increase for a while because of this global expansion, but we can expect that their sales also will be increased dramatically. MD&A provides not only good information, but also reflects Yelp's challenges and issues. One of its challenges is to improve its ability to attract and retain local businesses. Since its services are not fully known and understood by local customers, Yelp needs to develop relationships with potential customers more efficiently. The second challenge is to expand its market shares. As explained previously, Yelp has been putting a lot of effort in expanding its business globally. However, Yelp paid a huge amount for the expansion, and it's still struggling with the development of new markets. Yelp needs to find a way to apply its business model to a global marketplace at reduced costs. The third challenge is investment in growth. Since it provides technological services, Yelp needs to produce more user-friendly applications and hire professionals with the IT expertise.
The underwriters have an option to buy up to an additional shares from us to cover sales by the underwriters of a great number of shares. They may exercise that option for 30 days. If any shares are purchased pursuant to this option, the underwriter will severally purchase shares in approximately the same proportion as set forth. Goldman Sachs, Citigroup Global Marketing, Jefferies Company, Allen Company, and Oppenheimer companies. These are the major underwriters for Yelp. Growth in existing markets. Within existing markets, we will seek to increase the number of reviews, attract more users, increase usage of current users, and attract more businesses. Expand to new geographic markets. We are active in the United States, Canada, and Europe. Platform expansion. We plan to continue to innovate and introduce new products for our website and mobile app, and to introduce our content and solutions on new platforms and distribution channels. Enhance monetization. We intend to grow our sales force and expand our portfolio of revenue generating products in order to reach more businesses and increase the amount they spend on our advertising products. Risk factors. We have a short operating history in an evolving industry, which makes it difficult to evaluate our future prospects and may increase the risk that we will not be successful. We have incurred significant operating losses in the past, and we may not be able to generate sufficient revenue to achieve or maintain profitability, particularly given our significant ongoing sales and marketing expenses. Our recent growth rate will likely not be sustainable, and a failure to maintain an adequate growth rate will adversely affect our results of operations and businesses. If we fail to generate and maintain sufficient high-quality content from our users, we will be unable to provide consumers with the information they are looking for, which could negatively impact our traffic and revenue. Negative publicity about our company, including our technology, sales practices, personal or customer service, could diminish confidence in and the use of our products. If we fail to maintain and expand our base of advertisers, our revenue and our business will be harmed. Our international operations involve additional risk, and our exposure to this risk will increase as we expand internationally. We have started to expand our operations internationally. We expect to expand our international operations significantly by accessing new markets abroad and expanding our offerings in new languages. We expect to face increased competition in the market. The market for information regarding local businesses and advertising is intensely competitive and rapidly changing. With the emergence of new technologies and market entrants, competition is likely to intensify in the future. We face potential liability and expense for legal claims relating to the information that we publish on our website and mobile app, including claims for defamation, libel, negligence, and copyright or trademark infringement, among others. Why local businesses choose Yelp? We note that your website indicates Yelp advertising packages typically range from $300 to $1,000 per month, depending on how aggressively a business wants to attract customers. Further disclose how, with this information, you increase our ability to attract users and advertisers and increase the frequency with which they use your website and mobile app. If we fail to generate and maintain sufficient high-quality content, we note deletion of the term up-to-date. Please revise to specifically address how dated reviews that may be considered of little continued relevance affect the desirability of your services. Our business depends on a strong brand. Please provide us with screenshots of the ambassador badge of each category of community manager content, showing how the badge would display on each category, if at all. We note that it appears that the ambassador designation is not included on individual reviews. Our business could suffer if the jurisdiction in which we operate changed away. Please revise to disclose with specifically what information you collect from your users, how you use this information both internally and for the benefit of advertisers, and whether you distribute user information to outside parties including advertisers. Domestic and foreign laws may be interpreted and enforced in ways that impose new obligations. Specifically address whether your current expiration policy would comply with the Credit Card Act of 2009 and related state law if those laws were held to cover Yelp deals. Result of operations. Revise further to describe fully the impact of the Yelp deals strategy shift. Make clear whether you plan to de-emphasize this aspect of your business and if you expect growth attributable to Yelp deals to slow. In addition, disclose whether you expect continued increases in domestic sales and marketing expenses in addition to the elevated expenses abroad. Revenue recognition. We generate revenue from local advertising, brand advertising, and other services, which include Yelp deals and various partner arrangements. Website and internal use software development costs. We capitalize certain costs related to the development of a website or software developed for internal use. In accordance with authoritative guidance, we begin to capitalize our costs to develop software when preliminary development efforts are successfully completed. Management has authorized and committed project funding, and it is probable that the project will be completed and the software will be used as intended. Such costs are amortized on a straight line basis over the estimated. Income taxes. We record income taxes using the asset and liability method, which requires the recognition of deferred tax asset and liabilities for the expected future tax consequences of events that have been recognized in our financial statements or tax returns. We account for stock-based compensation in accordance with the authoritative guidance on stock compensation. Under the fair value recognition provisions of this guidance, stock-based compensation is measured at the grant date based on the fair value of the award and is recognized as expense net of estimated forfeitures over the requisite service period, which is generally the vesting period of the respective award.
As you can see from the graph, Yelp stock performed poorly in 2015. Shares of Yelp have dropped by nearly 50% in the last 12 months. We'll present you Yelp's performance for the first 3 quarters of the current year and factors affecting Yelp's business and stock movement. In the first quarter of 2015, the company reported a net loss of $1.3 million, which is 2 cents on a per share basis. It was higher than Wall Street's estimate of 1 cent per share. The company reported revenue of $118.5 million against analyst expectation of $120 million. The company said it suffered lowered sales productivity because of a change in how sales reps handled account leads. The company reverted back to the old system in March and said it expected to see improved productivity. In quarter 2, Bloomberg reported the website is no longer exploring a sale. In the first 2 quarters of 2015, the company has seen its stock tumble more than 22%. Yelp's quarterly earnings missed Wall Street's forecasts, and its revenue outlook also missed estimates, disappointing investors. Subscriber growth continued to slow in quarter 2. In the third quarter, Yelp reported another quarterly loss due to a sharp increase in sales and marketing spending. The company spent around $83 million on sales and marketing in the most recent quarter, compared to $55 million spent a year earlier. Loss totaled 8.5 million or 11 cents a share. Compared to 2013, a year earlier, the company incurred a profit of 3.6 million or 5 cents a share, but revenue at the local services company rose 40%, topping its expectations. Several forces affect stock price movements, which are company news and performance, industry performance, investor sentiment, and economic factors. The factors we are presenting to you are mostly company related. The first one is phase out of brand advertising. Yelp plans to phase out brand advertising by the end of the current year and focus almost exclusively on local advertising. This strategic decision would benefit Yelp in the long run by improving its mobile app experience. It's a really long-term investment in the consumer experience because brand ads are taking up quite a large amount of real estate, and since 70% of its page views are now coming from the mobile app, brand ads end up slowing down the experience. From the revenue standpoint, back in 2015, 25% of revenue was coming from this product, but now it has declined to 6%. Now is a good time to actually make that commitment to improve the consumer experience and move brand staff by the end of the current year and reallocate those resources. The second one is Yelp's lowered guidance. Yelp's shares fell about 30% following the release of its second quarter earnings. Much of that drop was likely attributable to Yelp's disappointing guidance. For the full year of 2015, Yelp lowered its outlook and expected revenues to be in the range of 544 to 550 million compared to initial outlook of 579 million. Approximately two-thirds of the lower expectations is due to lower than expected headcount, and approximately one-third is related to the phase-out of their brand advertising products. Competition is another big factor affecting the poor performance of 2015. Yelp relies on search engines like Google and Bing to attract users. For Yelp, the issue is the business model is simple to copy, and while the company now has the advantage of name recognition and existing relationships, consumer switching costs are low. That's why tension with technology giant Google Inc. has intensified as the search giant pushes its own listings. Google has entered Yelp's advertising space with its Google Plus ads, competing against Yelp in local advertising. Expansion of its competitors hurts Yelp's stock, as the high price to sales per share ratio is the main factor for pricing Yelp stock on high expected revenue growth. The last factor is Yelp's expansion. At the beginning of the year, it was rumored that Yelp could be sold. However, in the summer, the company called off its plans to sell itself, but it continued struggling to control costs and expand its advertising sales force and users. Yelp has been expanding internationally and recently launched in Taiwan with the hopes of international expansion driving growth. Also, the company started entering new categories. In February, Yelp acquired Eat24, a delivery takeout food business. Because of that, Yelp has had to incur higher operating expenses to fuel its rapid expansion. We believe that Yelp's planned expansion spree may lead to an increase in selling and advertising expenses, as it will have to increase its marketing and operational costs to sustain the growth in new markets. We hope we gave you guys some useful information about Yelp's IPO process. Thank you everybody for paying attention.